UltraTech Cement is out with its numbers, 370 crores. That is what they have put out in terms of the net profit this time around. So this is pretty much in line with what the ET Now poll was expecting, close to 374 crores. So I think that's a good bump up of 35% on the bottom line figure. The net sales, it was expected to be rather flat this time around, so we'll be waiting by for that number, 4,893 crores. That's what we have our eye out on in terms of the ET Now expectation. 4,817 crores, that is what they have put out. So the net sales this time around has been a little bit lower than what we were expecting. So it's probably seen a downtick on year-on-year basis. So 370 crores, that is what they have put out in terms of the profit. Now remember, it's not like we were going into the UltraTech earnings with very high expectations. In fact, prior to the numbers also, the stock had seen quite a bit of decline on anticipation of a weak quarter. The EBITDA, that stands at 795 crore rupees, and as per the ET Now estimates, that's bang in line with what we were expecting. It's been the continued pricing pressures that has really taken a toll on most of the cement companies, and that would really be affecting them in terms of the operating profits. The price hike, in fact, they had undertaken one in October to November, and we'll also be watching out keenly for the volume numbers this time around that they put out. It's seen a close to 9.7 million tons. That's down by 2% on a year-on-year basis. The stock is sort of digesting those numbers. It's not been a great set of numbers, but it's pretty much in line with what we were expecting.
Some of the fundamental guys who track the stock closely were saying that perhaps this is one of the last of the weaker earnings, and that is why, despite an average set of numbers, the stock is just trading flat. In fact, it has been adding on weight if you look at the last 1 month or 3 months. But when you look at a sales number which is almost slightly on the softer side, and the profits are flat, realization would also be taking some bit of a hit. Let's try and get you on that. Mangesh Bhadang, a cement analyst at Quant Broking, joins us. Mangesh, thanks a lot for joining us. Sales has been slightly on the lower side, profitability at 370 crores, almost flat. How are you reading the numbers?
I think the numbers are on a lower side, and what we do is probably we're expecting the numbers to be in excess of 400 crores. So definitely it's on a lower side, both in terms of EBITDA as well as in terms of the profit. So I don't have any numbers in terms of cost, so probably I would have commented further on it.
The EBITDA has come in bang in line with what we were expecting at 795 crore rupees this time around. Do you think that, the absence of any volume growth, the fact that they've been seeing continued pricing pressure, that will overall weigh on the operating numbers as well?
Yeah, so what I have seen is basically whatever the numbers or whatever the prices that we check from dealers and the YOY growth in terms of quarterly, definitely that has not come in. So that means that the pricing power is definitely absent, and there could be more non-trade sales of cement which are at a lower price. So the companies are offering discounts even on the retail price, and that's what probably is keeping the realizations on the lower side. So from a weak September, we would have expected the PAT to inch up substantially. But the 370 crores, it has not happened. So, if you look at the history, probably this would be one of the, after the 2010 would be one of the worst December quarter numbers. So, it's pretty bad in terms of overall profitability.